Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Beckton, Dickinson and Co, commonly known as BD. BD is a global medical technology company that provides innovative solutions in healthcare, particularly in the areas of medical devices, laboratory equipment, and diagnostic products. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
BD has been a major player in the medical technology industry for years. From a behavioral finance perspective, how do biases like the status quo bias and overconfidence influence their decision-making, especially in areas like product development and market expansion?
The status quo bias is particularly relevant to BD approach, especially in how they manage their product portfolio and our investments. The status quo bias refers to the preference for maintaining existing conditions rather than making changes. BD leverages this bias by focusing on continuous improvement and optimization within their established product lines, such as syringes and diagnostic instruments. This approach ensures that BD maintains a high level of reliability and trust among healthcare providers who rely on their products. Overconfidence also plays a significant role, particularly in how BD approaches innovation and market expansion. Overconfidence refers to the tendency for people to overestimate their abilities or the success of their strategies. Given BD's long history of successful product development and market leadership, the company's leadership might exhibit strong confidence in their ability to continue innovating and expanding into new healthcare markets. This overconfidence can drive BD to invest heavily in advanced medical technologies and pursue acquisitions with the expectation of significant returns. While this can lead to successful ventures, it also poses risks if BD overestimates market demand or underestimates the challenges associated with new market entry.
And this focus on leveraging the status quo bias and overconfidence has helped BD maintain its leadership position in the medical technology industry, appealing to both healthcare providers and investors who value reliability and innovation.
Exactly. BD's strategic use of the status quo bias in maintaining their core products and overconfidence in pursuing innovation and market expansion appeals to investors looking for a company that balances stability with growth potential. However, this approach also means that BD must carefully manage the risks associated with regulatory changes, technological advancements, and competitive pressures, particularly as the healthcare landscape continues to evolve with new trends and demands.
Let's talk about diversity, equity, and inclusion at BD. As a major player in the healthcare industry, DEI is particularly important for BD. How does this intersect with behavioral finance?
BD approach to DEI is crucial, especially as the company operates in a global and highly regulated industry where diverse perspectives can drive better decision-making, operational efficiency, and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance BD's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows BD to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the medical technology industry. For investors, BD focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help BD build stronger relationships with healthcare providers, patients, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like healthcare, where the ability to foster inclusivity and operational efficiency is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, BD not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, BD operates in a highly regulated and fast-evolving industry. How does the company adapt to changing healthcare trends and market conditions, and what role does behavioral finance play in this?
BD's strategy involves continuously adapting its product offerings, manufacturing processes, and business models to meet the evolving needs of healthcare providers and patients while maintaining its focus on innovation and regulatory compliance. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with regulatory changes, technological advancements, and shifting healthcare demands. BD ability to understand and respond to new healthcare trends such as the increasing demand for personalized medicine, the shift towards value-based care, and the integration of digital health solutions allows it to stay relevant and competitive. By using data analytics, customer feedback, and market research, BD can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the healthcare market.
And this adaptability is essential for BD, especially as they face competition from other medical technology companies and the growing demand for more advanced and cost-effective healthcare solutions. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. BD focus on understanding healthcare market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the medical technology industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in healthcare policies, technological advancements, and competitive pressures.
Now, let's compare BD to other companies in the medical technology and healthcare sectors like Medtronic, Thermo Fisher Scientific, and Abbott Laboratories. How do the behavioral finance dynamics differ?
BD dynamics are often compared to other medical technology giants like Medtronic, Thermo Fisher Scientific, and Abbott Laboratories, particularly in their approach to innovation, market expansion, and competition. BD's strength lies in its focus on core medical devices and diagnostic solutions, appealing to investors looking for a company that balances operational excellence with strategic innovation. Medtronic, with its emphasis on medical devices and therapies, appeals to investors interested in a company that prioritizes technology-driven healthcare solutions. Thermo Fisher Scientific, known for its leadership in laboratory equipment and life sciences, attracts those looking for a company that is driving advancements in scientific research and diagnostics. Abbott Laboratories, with its focus on diverse healthcare products and nutrition, appeals to investors interested in companies that integrate consumer health with medical innovation. BD behavioral finance dynamics are shaped by its reputation for reliability, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the medical technology industry.
And unlike Thermo Fisher Scientific, which focuses heavily on life sciences and laboratory equipment, BD's strength lies in its specialization in medical devices and diagnostics, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For BD, the focus on core medical products, innovation, and market adaptability provides a unique value proposition in the healthcare industry.
To sum up, BD approach to business is deeply influenced by behavioral finance principles, whether it's through their product development strategies, adaptation to changing healthcare trends, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives BD's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.